So we're all wondering what happened to ULTY in the overnight trading. It dipped all the way down 20% to $4.59. And in this video, we're going to explain possibilities of what exactly happened. A lot of people are confused and kind of go into how exactly the price of ETFs work to better understand the possibilities of how this huge dip occurred. And to answer that, we need to understand the creation and redemption process that keeps ETFs in line with their true value, the net asset value or NAV. And then we can look at what happens when that processes aren't active, like during overnight trading, just like we saw with the ULTY on this massive dip. So the basics of an ETF or exchange traded fund, it holds a basket of stocks or other assets wrapped into one share you can buy and sell just like any other stock on the market. And in the case for ULTY, it has over 100 different holdings. It's going to have about 15 to 30 equities, and then it's going to have a bunch of options overlays as well as treasuries. And the ETF's NAV is the total value of all the holdings divided by the number of outstanding shares. But the ETFs trade on the open market, so their price can move away from the NAV, sometimes trading at a premium or a discount, which is going to be below the NAV. And this is where we get into authorized participants. These are the people that keeps ETFs aligned with the NAV. And they are usually large brokers, dealers, or institutions. And as we can see, traditionally, they're going to be large banks such as Bank of America, JP Morgan Chase, Goldman Sachs, and Morgan Stanley. And they have the right to create and redeem shares of an exchange-traded fund. And basically, they increase the transparency of the markets by keeping the ETF prices close to their NAV. So authorized participants or APs are essentially the market makers behind the curtains. And it's very important to note that small investors cannot become these authorized participants. Now let's get into how ETF creation works. When an ETF demand pushes the market price above the NAV, the APs buy the underlying basket of stocks, the ETF, and then they deliver it to the ETF issuer. And the issuer gives them the new ETF shares. And then finally, the APs sell these ETF shares on the market. And this is going to increase the supply, pushing the ETF price down towards the NAV. And that is going to be the creation process. For the ETF redemption process, when the ETF price falls below the NAV, the APs are going to buy ETF shares on the open market and then redeem them with the issuer for the underlying stocks. And then APs can sell those underlying stocks separately, which is going to help reduce supply and pushing the ETF price up towards the NAV. And this matters, this creation and redemption mechanism, because it keeps ETFs trading close to its NAV and provides liquidity, which is going to be very key in volatile markets. And it helps protect investors from persistent premiums and discounts, unlike other closed-end funds like Cornerstone. But here's the catch. With overnight trading, APs and market makers are not going to be active. They're only going to be active during the regular market hours. And this can arbitrage the price difference during the market hours, and they can hedge by trading underlying holdings. But during the overnight trading, especially with Robinhood, who uses a different provider, liquidity is going to be very thin, and APs can't effectively arbitrage because the underlying stocks may not be trading. And in the case with the ULTY, many of its holdings do not have overnight trading. So even a small order, whether it's a buy order or sell order, can swing the ETF price very dramatically. And we can see pre-market, the ETF price of ULTY is already back to its normal around $5.70 price point. And I know a lot of people were panicking during that $4.59 drop, and I actually picked up 100 shares of this ETF at that price point, which is kind of crazy. And a lot of people were able to pick up shares at that price point because people were panic selling. As this guy right here, he sold 15,000 shares at $4.59, pretty much the low So a lot of people were able to pick up the shares that he was selling. Very unfortunate for this guy, but a lot of people did like buying those dip shares. And we can see this guy ended up buying almost half of the shares that the other guy sold at $4.59. And as this guy explained on the YieldMax ETFs subreddit, ULTY will revert to the NAV, which is around $5.70 in the morning, which, as we can see, it actually already has $5.71. He's explaining that it dropped because, as we mentioned earlier, there's no market makers or APs in the after hours for a small ETF such as ULTY, so it got significantly detached from the NAV, and of course market makers had to step in and bring it back to the real price. And this guy on the YieldMax subreddit does have a pretty good PSA on why we're seeing such a different pricing on Robinhood and Yahoo compared to others during the after hours trading. So Robinhood uses something called the Blue Ocean ATS alternative trading system to let people buy and sell stocks and ETFs outside of the regular market hours. As you notice with Robinhood, they have a lot of different stocks and ETFs that you're able to buy and sell for 24 hours. And these trades are real and shares do change hands, but the volume is very tiny compared to what happens on the regular stock exchanges. And with such little liquidity, even a small order can push the price way down or up, and that's why we see huge swings in prices in the after hours, especially on Robinhood. So basically he's saying that someone had a huge sell order, which caused the price of ULTY to drop, which caused more people to panic sell. And as we saw, people even sold hundreds, thousands of shares at very low prices. As we can see, I picked up 100 shares at $4.59, and I know a lot of people who did pick up shares at the very bottom pretty much made an instant about 15% gain as the price has recovered to $5.71. So it's pretty interesting what happened. A lot of people are confused, and I personally am confused myself, and this is the best way that I'm understanding it. So in the case of ULTY's flash drop, it wasn't really the NAV collapsing or the ETF losing its holdings, which have not moved at all during the after hours. But what really happened is someone sold into a very thin overnight order book, and with no buyers around until $4.59, that's where the next trade printed. A lot of people thinking it's market manipulation and it's market makers that have caused this drop or even short selling, but it looks like it's not really the case because a huge institutional sale would normally be spread across market hours for best execution, and overnight moves often don't need massive volume. Sometimes it's just a few thousand shares, which can cause a sharp dip when liquidity is very low, and that's why it looks a lot scarier than it is. So we can let this be a lesson for investors. If you see an ETF like ULTY suddenly plunge overnight, especially during the after hours trading, don't immediately panic. Check its NAV for implied value from its holdings and ask if the move happened during very thin liquidity hours. And you have to understand that the arbitrage will likely restore prices once the markets reopen. And it can actually provide very good buying opportunities when you see sharp declines just like this, as the price will go right back up. And the same can happen with the opposite. Say if ULTY rose 20%, that of course would be a good sell opportunity, especially if it's in the overnight trading with very low liquidity. So the drop for ULTY wasn't really a sign of a collapse, but it was a perfect example of ETF mechanisms in action, as the creation and redemption process only works during normal market hours. And then it also shows the dangers of very thin liquidity. Overnight trading can exaggerate moves, especially when people are selling. It's going to be very detached from the NAV. And I especially was not panicking at all because I noticed that a lot of the holdings in ULTY does not have access to the 24-hour trading, so it couldn't have been anything with the ETF, and it was just people selling out of the ETF in a very low liquidity environment. So in the end, ETFs like ULTY depend on the market makers and authorized participants, the APs, to keep prices honest. And if they are asleep, especially during the after hours, you can see wild swings. But as soon as the market wakes up, prices tend to snap back to reality and go back to normal, which can actually be very good opportunities to make some money if you see this kind of activity occurring. So in the end, you don't really want to be like this guy and panic selling at the very bottom just because you see the price become so detached from the NAV.